Welcome to the Daily Stock Review. Today we're going over AI Media, an Australian company. Goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an investor on the journey, 2,500 hours in over the last 7 years. I'm just sharing the lessons along the way. Today we'll be going over the stock analysis. I've already done the YouTube comment Q&A and reviewed goals in another video today. So if you're interested, go and check those other ones out. Investing process, we'll go over where I found this stock and do a 5-minute check on it to see if it's worth looking at further. Learn from these guys. Want to follow the breadcrumbs that they've left behind and for their successes. Hopefully follow in their footsteps. Let's jump straight in. So I want to just pretty much looked up AI Media and typed in annual report with it as well, and we'll crack that open. So the latest one is from last year. It'll be interesting to check out the latest when it comes out in another month or two. And the reasons for that are the marketplace has significantly discounted the stock. So that's not down to 0, that's down to 0.2, also 20 cents. But this annual report came out around this time last year. We saw a bit of an increase in it, but it's since dropped off the face of the planet. And a lot of that has been to do in the Australian market. A lot of investors have, I guess, been quite fearful of what the constant changes and innovations that are happening in the AI space, and thinking that these businesses are going to come along and be completely wiped out by advances in AI technology. So is that the case? Not really. There's a lot of different things that need to happen for these other technologies to be able to do the same things that these companies have. And so there is intellectual property and bits and pieces like that. There's also the customer base, which is incredibly important. It's a challenge to be able to go and get and build a customer base to be able to sell a product to. You can have the best product in the world, but if no one actually sees it, it doesn't matter. It's Pixar, it didn't happen pretty much. So what have we got here? 80-page report, annual, nice. So what I want to do is I want to just have a look at the financial statements. And sorry, first of all, how did I come across this company? I've got a couple of guys that I follow on LinkedIn and a couple other areas like that, following some investors, and they've been sharing some of these guys' AI Media's content on the platforms and doing some quick write-ups about it, saying either they're invested and things like that. So I think there's Ron Shamgar and a couple of other guys in the space as well. So I picked it up, added it to my have a look at and ideas bucket, and now we'll try and go through it. So if you jump into any report, you can get bogged down with just reading this stuff, and annual reports can be as boring as batshit at the end of the day. So what I want to have a look at, first of all, for this quick 5-minute check is I want to find the actual the actual financial report. And we've got a sign off by Deloitte. Yeah, cool. And we want to have a look at this income statement, and we want to see if there's any facts that have come to fruition, because talk can take a while for it to actually be people talking about various things and saying that things are going to change within a business can take a bit of time. So 24 to 25, we can see that revenue has stayed pretty much the same. Their expenses have been very similar. And loss before income tax expense loss before is 296 to 526, and then income tax, other comprehensive income, blah blah blah, and loss at the end of the year. So it has made a loss. What's this in? It's in thousands. So that's $603,000. All right. So on paper, it's making a loss. Let's go and have a look at the assets of the business. So from 24 to 25, cash and cash equivalents has grown from 10 to 14. And total current assets, so assets that they can liquidate and get turned to cash in the next 12 months, it's gone up from 26 to 36. And total current assets, so what do we got here? Intangibles is interesting that that's the majority of their assets and the cost base for it. What else have we got? Current liabilities. So trade contract liabilities and non-current liabilities with a total for all liabilities of 1725 versus all this cash on hand, etc. Do I think this business is going to go under? From looking at this, the answer is no. Look like they have enough cash on hand and definitely enough current assets that they should be able to pay any of their liabilities. And they've also got money coming in, but it's coming at a loss. So let's just have a look in the cash flow statement where that money that comes in is actually going. So we'll take away the non-cash charges that don't affect the business. Payments to suppliers and employees, income received. Wow. Payments to suppliers and employees is 73 versus 67. Right. So what is going on here then? So net cash from operating activities is just $5.2 million. Payment relating to acquisitions, payments for intangibles, net cash used in investing activities. So they haven't invested much. Payment relating to acquisitions. So you can see back here that they spent $8 million on an investment. That investment, obviously, this isn't showing 2023. And they don't have any terms here where it's writing off those assets. So it's interesting to see that they've purchased something and it doesn't appear that it's bounced through in terms of the income the business is generating. Cash flows from financing. So have they tried to prop the business up? Repayment of premium funding. So you're going to pay some of that. Increase cash and cash equivalents at the end of the year. It's gone from previous year from 17 million down to 11, from 11 down to pretty much, or back up to 14 and a half. So a bit of change, like net cash from operating minus the property, plant and equipment, we're left with $4 million. So at the end of the day, this business, that's a pretty low margin business in terms of the amount of money they bring in versus the cost for it. And then, going through all that. So these guys make $4 million. Market caps, but currently, if going off that, is 41 million. PE ratio sitting, I guess, too low for it. And this is based on revenues. So if these guys are only making, if they've got revenues of 100 million, but they only make $1, the price to earnings ratio doesn't really make much sense. It starts to break down. And so there's usually a gap in here where a lot of investors pretty much just look at these kind of loose term is valuation metrics for it, but all it is just an indicator, and it's one of a couple of different tools that you can use to have a good indication of what something's actually worth. Company that's only making, $4 million a year, and its market cap's at 41. That's just saying it's at it's around worth 10x that value. Now, having a look at what it's currently worth, is it, room to jump in? Potentially. It would be worth going back and having a look at what their latest quarterly results are and things like that. Do I want to? Look, probably not. It might be a bit of a value play in terms of those revenues not actually showing up in the net income. And when that comes back through and the business is turning a profit, that share price can, I guess, dramatically go back up pretty much to either where it previously was, which over that time from 80 cents, almost $1, back down to 20 cents. It's a potential for a 4 or 5x, but the time frame is unknown. You don't know how long it's going to take for people to realize that in the marketplace, so don't rely on that. There's lots of things it can do. It's an interesting one. Let's see what Abrams is, the CEO. Let's see what he's doing. So change of interest in securities. Date of last notice was the 5th. So date of change was the 6th of July this year. Ordinary shares held. Direct interest, ordinary restricted unit shares, indirect interest. Blah, blah, blah. Numbered acquired. So he's acquired 100,000. So just RSU. So just the stocks that he was going to be granted. Number held after the change. 37, and then indirect. Direct, indirect. Held by Pearly Rose. So no, actually, am I reading that right? Or is there like one digit that's changed? Yeah. Direct interest, ordinary shares is just increased by a small amount, just 100,000 shares compared to the 11 million that he's got. So it's only a small difference. So he's just acquired them. He hasn't effectively bought more shares in the market from that transaction. They're just ones that were granted as part of stock options from the company. There's a couple other change in substantial holdings and things, but at this stage, this business doesn't really jump out, doesn't fit my rationale for finding the best businesses, that 100x or anything like that. Definitely an option for a value play, given the significant, change in investor sentiment. This is the parts of the market where we can definitely make some significant coin, but I won't be going through that in a future video. It's up to you guys. If you guys have another interest or you guys are going to go through that, feel free to drop any comments. If you're long or short AI media or anything like that, feel free to put in a comment. Let us know your rationale behind it. It'd be great to know. And yeah, if there's any other stocks you guys are interested in, feel free to put those in as well so I can have a sticky beak at them for you guys and give you my take. Is that the best take? Probably not, but it's just mine. And if you've liked it, feel free to drop a like as well. Appreciate it. It helps the channel reach other investors that are interested in this stuff just like you. If there's nothing else, otherwise check out this next video. YouTube reckons you'll like it, and have a great day. Cheers.